Ladies and gentlemen, good day and welcome to the Lloyds Metal Earnings Call hosted by Anand Rathi Share and Stock Brokers Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference to Mr. Parthiv Jhonsa from Anand Rathi Share and Stock Brokers. Thank you, and over to you, sir.
Thanks, Alaric. Good evening, everyone, and thank you for joining us today. We at Anand Rathi are pleased to host Lloyds Metals and Energy Q4 and FY'25 earnings conference call. We have with us today from the management, Mr. Rajesh Gupta, Managing Director, Mr. Riyaz Sheikh, CFO, and Mr. Chintan Mehta, CIO. Without further ado, I would now like to invite Mr. Rajesh Gupta to initiate the proceedings for the call. Thanks, and over to you, sir.
Thank you, Parthiv. Good afternoon, everyone. A warm welcome to all our investors joining us today. A special thanks to the team at Anand Rathi for hosting this call. FY'25 has been a remarkable year for Lloyds Metals and Energy. We have achieved the highest ever profit before tax. We have achieved the highest ever sponge iron production for a financial year and maintained the annual run for iron ore as well. For the second year, we've completed 100% of our capacity of 10 million tons. We are in the consolidation phase and we have also strengthened our CSR commitments in the likes of education initiatives like 2 schools, Lloyds Raj Vidyaniketan and GD Goenka Lloyds Public School in the 2 towns of Gadchiroli and Hedri. Health and water initiatives, including one 30-bedded hospital and various checkups have been also, medical checkups, eye camps, etc. have been carried out also. And also sports initiatives like the Gadchiroli Premier League for fostering youth empowerment has been done in that area. I'd like to give an update on the Triveni MDO business acquisition. NCLT approval is underway and is expected to be done by Q1 FY'26. The 2 entities have started integrating culturally. Our teams are bonding well and aligned with company's growth objectives. We believe this is a major milestone which will unleash a huge opportunity going ahead. Moving forward on our CapEx progress, the slurry pipeline is commissioned and complete, and right now, today only the material has started moving from Hedri to Concall. Other projects like the 4 million ton pellet plant, the 350,000 ton DRI plant and the 60 megawatt power plant are nearing completion. These projects are progressing at a breathtaking speed and are significantly ahead of typical industry timelines. We received EC for the pellet plant in November 23 and sent the pre-commissioning. This is close to around 18 months. This is for a greenfield plant which includes getting water and power infrastructure to 2 greenfield locations in difficult terrains in Gadchiroli. Similarly, for DRI 360,000 ton plant and the 60 megawatt power plant, we received the EC only in February 24 and one plant should be commissioned in June 25 and the other by July 25 as well, within a gap of 1 month of each other. This affirms our commitment towards timely execution of our projects. Coming specifically to Q4 FY'25, our iron ore volumes were subdued in Q4. It is within 10 million tons for the year. The reduction in volume partially was because of we front-ended the production, anticipating the EC clearance for the expansion a little earlier. That did not happen. So but we had dispatched in the first 3 quarters more quantities, and therefore only lesser quantities were left for the quarter ended. Lower volumes in this quarter naturally led to lower absorption of fixed costs and therefore margins seemed subdued. Regarding the mining EC update, which many would like to hear on, this is one of the largest mines in the country. This will become one of the largest mines in the country, irrespective of any mineral except coal. The time taken for approval is therefore a bit longer than our expectations. We appreciate the authorities' cooperation in this regard. All major formalities have been completed and we await the final outcome from MOEF very shortly. Given the scenario, we foresee some minor loss of iron ore volumes from 25 million ton to maybe 1 million ton lesser. Industry outlook. The Indian iron ore market continues to be buoyant, defying the international market. The prices are very steady and the demand on steel is running consistently at 8% year on year and therefore also on iron ore. The government's focus on steel capacity expansion has remained strong and multiple government initiatives have initiated the urgent need of scaling up of greenfield iron ore mining as well as beneficiation. Most importantly, the saga of high-priced auction continues with an average of 20 million tons is now further scheduled every year for the next 5 years to exit the allotted route and go into auction route. We once again reaffirm our commitment to creating long-term value for all our stakeholders. Thank you for your continued support and for being part of our exciting growth journey. And now hand over the call to Riaz, who is our CFO, to walk you through through the detailed financial performance.
Thank you, Rajesh, for the detailed insights and setting the context for today's discussion. Good afternoon, everyone. Let me take you through the key financial highlights for FY'25 and Q4 FY'25. FY'25 revenue grew by 3% year-on-year. Growth was primarily led by better realizations for iron ore and record sponge iron production. Iron ore volumes remained flat year-on-year at 10 million tons. Iron ore sales volume for Q4 FY'25 stood at 1.66 million tons. In regards to EBITDA performance, FY'25 EBITDA grew by 13% year-on-year to INR 2005 crores. Growth was driven by higher realizations in iron ore. However, realization for sponge iron and power remained muted, which slightly moderated overall EBITDA growth despite record volumes. Speaking about realizations in per ton, iron ore realization for Q4 FY'25 stood at INR 5994 per ton, down 6% year-on-year. FY'25 realization was INR 5766 per ton, up 6% year-on-year. Iron ore EBITDA per ton for FY'25 was INR 1801, up 5% year-on-year. DRI and power segment. DRI volumes for FY'25 stood at 308,000 tons per annum. Power volumes grew 5% year-on-year for FY'25. However, realizations for sponge iron and power are muted impacting segment margins. Few additional points to be taken note are ESOP costs for the quarter was around INR 13 crores, which is non-cash. There were some community development expenses for around 17 to 18 crores in this quarter. As regards to the capex, the company incurred a capex of INR 1690 crores in FY'24, which increased to INR 3695 crores in FY'25. We are guiding a capex of INR 6000 to 6500 crores for FY'26, focused on mining, pellet and steel capacities. With this, we would like to open the floor for question and answers. Thank you.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Siddharth Mehrotra from Kotak Securities. Please go ahead.
Hi, sir. Thank you for the opportunity. I just had a small query on the volumes which we plan to do. So, sir, now we are almost on the verge of monsoons, and while we have guided that we will get our EC soon, that will perhaps significantly impact our volume ramp up. So, I mean, can you just lay out the steps you have taken to ensure that the materiality of lower volumes is not there when the final volumes for this year come out?
So, last year also the volumes in the monsoon were not as bad compared to the average, number one. Number two, this year our pipeline is commissioned and that will help in moving the volumes out of the mine. The mine itself is not majorly affected by the monsoons. So last year we did around 2 million tons in the monsoon, which is equal to an average of the year. I mean, and we assume that the similar percentage would be achieved during the year. We hope to be, we have already started producing in a larger quantity, and the first quarter itself will give better results, better quantity than earlier.
Okay, sir. And this 20, so approximately 20% of full year volumes in monsoons, right? That is the base case assumption.
Yeah.
Okay, and when we're considering monsoons, approximately that is 4 months of the year? 3 months?
Help a lot in that, Mr.
Okay, sir. Okay. Thanks for the opportunity, sir. Thank you.
Thank you. The next question comes from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, hi. Good evening, everyone, and thanks for the opportunity. Just a couple of questions from my side. The first one is again on iron ore volume. So you mentioned in your prepared remarks that the EC is still pending, and we may fall short by 1 million ton or something thereabout. So what would be your guidance at this point in time for FY'26? And the related question is that at where we see this EC approval getting stuck, because 1 month has already passed in Q1 FY'26. So just wanted to give a little bit more color on this aspect.
Okay. As far as the EC aspects are concerned, the process is on. The committee had in fact made a visit to the mine, which is normally not a requirement because it's such a big mine. We welcome them to our mine, and post that the processes are over, and we hope to be getting it very, very shortly. We are given timing earlier also, but at this moment I think May end should be the date that we anticipate in the worst case. Yeah. And in terms of the volume guidance, like I said, around 1 million, 1.2 million ton maximum would be reduced based on 25 million ton.
Okay, so that means the second half could be a bit more heavy in terms of volumes compared to the first half of the year.
Yes.
Okay, great. The second question is on the capex. So in the prepared remarks, it was mentioned that 6,000 to 6,500 crores capex in FY'26. First of all, does it include maintenance capex as well? And if you could divide it into broad buckets where it would be invested in what all equipment?
See, the year when we take the 6,500 crore is including the mining assets, that is for the beneficiation plant, the steel plant, that is 1.2 million tons wire rod plant, the pellet plants. These are all included in this. Plus some normal capex. Normal capex is it's not to a larger term, but it should be around 50 odd crore rupees for a particular year, as going with the average is what we have been doing.
Okay. The third one, if I can, is update on BHQ. So in the presentation, you did mention that there has been, there have been some progress, etc. I just wanted to understand where we are on that, and if the commissioning timeline that we have anticipated is on track.
So on BHQ, the pilot plant is performing extremely well. We have updated our technology inputs to reduce processing costs a little bit on that and fine-tuning that. That's number one. In the meantime, the engineering of the overall project is going on at large pace in China with our partners there. Number two. Number three, on the permission level, we are anticipating to get the permissions to start the ground progress by around Diwali 2025. So with that the case, and then so by Diwali June, July 27, we should be in a position to start the beneficiation plant of the first train, and 6 months thereon up for every train. So there will be 3 trains of 15 million tons input and 5 million tons output. So July 27, March 28, and July 20.
July 28, March will finish off.
Yeah, March 28 we will finish off. Sorry.
Okay.
Yeah.
Got it, sir. Got it. Thank you so much, and all the best.
Thank you. The next question comes from the line of Vikas Singh from Phillip Capital. Please go ahead.
Thank you for the opportunity. Sir, my first question is regarding the annual dispatch. While we still have the EC of 10 million tons, so any specific reason we fell short by 500,000 tons in terms of dispatches?
There is some captive consumption that is not iron ore sold, so that comes in the captive consumption side. The production of the mine was full 10 million tons.
Understood, sir. Sir, my second question pertains to the iron ore realization seems to be slightly up on a sequential basis, but if you look at the EBITDA per ton, so it was down sharply. Any specific reason for the same?
If you see for the overall full financial year, we are almost in fact better than what we have been achieving over the previous years. Yes, in this quarter, yes, it has been. There were some lumpy expenses for community development that was incurred. There were some ESOP expenses, as I mentioned in my call also. Plus what we have done is we have done some front loading of expenses in this quarter to ramp up our capacities to achieve the 25 million tons. So that is some major cost what has been taken into in this quarter, and that's the reason why the cost is on the higher side.
So effectively, the other operating expenses which are higher,
yes, that is basically updating us for the higher productions.
Understood, sir. So in terms of the iron ore market, on one hand you say that the Triveni might get a huge business with the iron ore mines they would need to commission in India. And at the same time, if more mines get commissioned, our existing business will get a little bit impacted. So just wanted to understand your views on the incremental iron ore availability and how do you see the prices in the domestic market in light of that?
Question that you raised about Triveni, but on the additional market, let me just throw some light. Indian steel market is growing at the rate of around 8% production and similar on demand. So that is a very positive sign. The iron ore market is growing little lesser than that, around 5 to 6%. Therefore, the exports are reducing, and international market is still very, very high compared to any Indian pricing. So that is still not a threat at all. And I don't see that happening any threat in the near future on the pricing front. In terms of, we did a detailed research through Steelment for our potential market, and we feel that around 70-75% of our material would be sold within 400 to 600 kilometers range of the mine or the pellet plant. So that is the status. We are seeing a lot of our customers are increasing their requirements, are increasing their capacities, and all that is helping us to increase, look at a very much better picture in terms of realizations going forward.
Understood, sir.
Could you repeat your question about Triveni, or does my answer?
It largely answers, sir. So just one last question, if I may. What is the spot iron ore prices versus 4Q averages?
What is the
spot iron ore realization versus 4Q average?
versus 4 to
4Q average.
Oh, we've received 6,000 rupees average. What is the spot prices?
would be around, this is including transport. Yeah. So again, this 6,000 rupees that we have achieved last year,
In the last quarter.
in the last quarter, will be around 6,200, 6,100. I mean, depending on the commodity and the location, it's going to be very similar. There's been no major movement. We have kept the prices constant. OMC has inched up the prices. NMDC has not. These are the two major merchant competitors, and we are keeping the prices in the right track. The steel market is not at its best. With the 12% safeguard duty, I think it will become better, but we have taken care not to increase the prices, even though there was some scope. We have not done that.
Understood, sir. Thank you. That answers my question, and all the best for future.
Thank you.
Thank you. The next question comes from the line of Jatin Damania from Swank Investments. Please go ahead.
Thank you, sir, for the opportunity. So just on the follow-up questions in terms of the beneficiation plan where our pilot plant is already ready. So as you indicated that definitely will be moving ahead with the capex. So what sort of capex are we envisaging on that pilot plant?
We have started giving equipment order for these equipment, and for all the three trains we anticipate around 5,000 odd crore rupees as a total beneficiation project.
And by when do we expect the plant to be ready?
So the first train would be ready, like I said, by June 2027.
By 28 March.
And sir, in terms of the cost-saving initiatives, now one of our slurry pipeline is being ready and will probably likely to be ready in the second half, and pellet plant 1 will be ready. So overall cost-saving initiatives, what will the cost-saving initiatives that we'll be getting in the second half based on the slurry pipeline?
The slurry pipeline is actually being commissioned today on trial run basis, and the pellet plant will be commissioned by end of June. The slurry pipeline initiates a cost saving of around 560 rupees per ton of pellet. Where the pipeline is for 10 million tons, we are commissioning the first phase by 5 million tons right now. The grinding will be commissioned. The grinding for the second 5 million tons will be commissioned along with the second pellet plant.
Last question on the pellet plant. Now we are doing a pellet in the 3 phases, phase 1, phase 2 and phase 3. So how comfortable and confident we are in terms of scaling our pellet capacity to almost 8 million ton that we'll be able to sell it or consume it?
In terms of selling pellet, I think the market is very vibrant. There's a very, I won't say a shortage, but a huge demand for lumpy ore or pellets. So, given our costing, we are confident of achieving a good marketing of that. We have, like I said earlier, we identified the markets and with the help of Steelman, and one of that has been that we have in our seed marketing campaign, we have been able to get been successful in a tender which happened day before yesterday with RINL, which is the first time that RINL actually bought pellets in the open market like this by auction. So we have been successful in that. Yeah, we are confident of achieving a profitable or EBITDA accretive, PAT accretive margins in our pellet plant.
Sure, sir. That's all from my side. Thank you and all the best.
Thank you. The next question comes from the line of Siddharth Gadekar from Equirius. Please go ahead.
Hi, sir. Good evening. So the first thing on the iron ore volume, so for FY'26, when we are guiding for 23-24 million tons of volume, have we started engaging with customers in terms of offtake and their demands? And how should we look at pricing going ahead, given that in the second half there will be a significant surplus that will be coming from us in the open market?
So, we are aware of the fact that 15 million ton increase, including the pellet, a part of the quantity would be fed into the pellet plant. So out of the 15 million tons extra, 4 million tons will be consumed in the pellet plant, right? So around 10 million tons goes in the iron ore market. Out of that 10 million tons, around half a million tons is consumed extra in our DRI plant. So we're talking about 9.5 million tons extra marketing to be done. We feel that our quality and the markets are such that it can easily be absorbed without any impact on the pricing. That's why I did mention in my opening remarks that around 100 million tons of material will be going out of the allotment route into the auction route over the next 5 years. That's an average of 20 million tons every year goes away from low-cost regime to a higher-cost regime. The auctions in the last three rounds have not been less than 125% with a peak of 200%. These indicate that the demand is very, very strong going forward as well. Stalwarts in the industry are paying those premiums. International stalwarts are paying 125, 135 premium. The last mine, one of the very small mines, went at a premium of 200% of the sales value. So obviously those people who are buying that are perceiving a shortage going time forward, and we are there to service them during that period with our enhanced capacity.
But we have started negotiations with our customers for that volume?
Yes, sir.
So secondly, on the pellet volume, how should we think about the production for this year?
Around 2.5 million tons.
Okay, so that's it. Thank you so much.
Thank you. The next question comes from the line of Prakhar Kanjanchi from Anand Rathi Financial Services. Please go ahead.
Good afternoon, sir. My first question is, on last call, you had guided for cost saving on consolidated basis once MDO merger is completed. Will this start from day one itself, or it will be or take time to flow?
As soon as we are just waiting for the NCLT order in this merger. So once the NCLT order is received, the consolidation will start happening, because the date is 1st April 25. So it will start from 1st April 25 immediately.
Okay.
On a consolidated basis, we will be having.
Okay. When will be the second pellet plant commission?
Second pellet plant will be a year behind the first pellet plant. Construction for that has also started. So we are confident of that
next year.
Yeah.
Okay. Thank you, sir. Thank you.
Thank you. The next question comes from the line of Divya Agrawal from Ficom Family's Office. Please go ahead.
Hi, sir. Thanks for taking. So I just wanted to know about the rationale behind raising the 5,000 crores that you have announced. And also, I just wanted to know about the capex that you have announced of around 6,500 crores. So how much is it? How much from it would be internal accruals?
Can you repeat your question?
5,000 crore to board approval here.
Okay.
Yeah, so I just wanted to know the rationale behind the 5,000 crore X, and secondly, I wanted to know the funding of 5,000 crore and the 6,000 to 6,500 crore of capex that you have announced. How much will be from internal accruals?
Yeah. See, the 5,000 crore resolution what we have taken, it's an enabling resolution. There is no concrete thing on it. What we are going to have going forward for any fundraise or any such thing to the equity route or any other route is not yet decided on. As of today, the 6,000 crores what we are anticipating on the project for this next financial year is all through internal accruals, and the balance of the preferential warrants what is pending to be called for.
Right. Got it. Secondly, on the IPS benefit, sir, how much did you receive in FY'25 versus how much were you expecting to be received in FY'25? And how much can we expect in FY'26 as well?
We have not received any IPS for the new projects. Only for the old project, we had received some 72 crore rupees of IPS in the last year. This year we will be
This year the accrual of the IPS starts as soon as we start the operations.
So it will be only on, it will be on accrual basis. We'll be getting that funds will be coming only in the next year, next financial year.
So in FY'23 you do not expect anything?
As a cash flow, no.
As a cash flow, the past inflows, the past dues would start coming in, or will come in majorly around 35, 40 odd crores.
In FY'26, right?
Yes.
Okay, sir, got it. And just wanted to know about the 40,000 crore revenue that you had guided in some of the previous communications by FY'28-29. So how much would the IPS benefit would be the contribution in that?
That's a difficult question. I don't think we have the answer to that ready.
That is too long a period.
In principle, let me explain to you that the IPS is capped by 150% of the investment that we do
In Gadchiroli,
and 115% of whatever investment we do in Chandrapur. In Gadchiroli, the investment in both the places, this cap would be reimbursed with a maximum of 12 years, as well as a minimum of 12 years. So basically, it will be divided by 12, and every year it will be accruing towards local sales GST. That is the SGST of that year, as well as the royalty as far as Chandrapur, as far as Gadchiroli is concerned, for the captive consumption that we do of iron ore. So based on that, we feel that every year, any project that we invest in, we will be getting the IPS over the next 12 years, 150 or 150% as the case may be. This is accrual plus 1 to 1.5 years for disbursement by the government of Maharashtra.
Okay, so it takes around 1.5 years for disbursement, right? After the commissioning of the project.
No. After it is accrued.
Okay, after it is
accrued, yeah.
Okay. Yeah. Okay, sir. Thanks a lot.
Thank you. The next question comes from the line of Karthik Khandelwal from Hem Securities Limited. Please go ahead.
Good evening, sir. My question was regarding the sponge iron Q4 FY'25 margins. Earlier, Q2 and Q3, we were able to achieve margins for profit before finance cost and taxes. The margins were around 27 and in Q2 and 18% in Q3. But it has drastically brought down to 0.84 in Q4. So any reason for that?
Sponge iron, yes, we have in this quarter, as I had mentioned earlier also, we have done some large expenses on community development which were required, and that's the reason that's the reason why it is on a higher side. Those expenses are one-time expenses which have it was a lumpy expense, and that is taken off most of the profitability.
The division of the quantity in the last quarter is lesser. I mean, though the year is very high, the division of the last quarter is similar. Similar. Sorry.
In fact, lesser than the last quarter.
Okay. Thank you, sir.
Thank you. The next question comes from the line of Rahul Agarwal from Aventis Capital. Please go ahead.
Hello.
Hi.
Yes, please go ahead.
Hi, sir. Yeah, thank you for the opportunity, sir. So I had a couple of questions. So the first one was related to the cost savings questions that a couple of people have asked you previously. Would be that, there is you mentioned in the presentations that there will be a high amount of cost savings through, Triveni, the India business, the slurry guidelines, etc. But I was having some trouble with the per ton cost savings that were related to mining and freight. Given the numbers in the presentations, it seemed as if the per ton cost are already quite low. And what we are expecting further, is it because of volumes, like the 500 to 600 per one pipeline and 800 to 1,000 per ton for the other pipeline? Will that be incorporated in terms of volumes?
The major volume, one of the major volumes savings would be because of the consolidation of Triveni into the company. Yeah, and I suggest that
the slurry pipeline.
And number two, the slurry pipeline. So these two reduce our cost of sales to some extent, to large extent. I think vis-a-vis the other figures, I suggest that Chintan could get in touch with you and resolve that matter. But basically, those are the two main big ticket items on a per ton basis.
Okay, sure, sir. Thanks. I actually tried to reach out to Chintan for last quarter. I wasn't able to do that, but I'll try to reach out to him again. So the next question was about BHQ realizations and volume. So I know that obviously the project is still some ways away from getting into full flow, but could you just give me an idea of what the realizations might be like, and what the volumes will be like once you start the plant?
BHQ is a byproduct of the mine. We have a reserves of around 700 million tons, which is normally thrown aside by most mines. The Fe content is only 35-38%. That's BHQ stands for banded hematite quartz. We would be beneficiating this material into a 66% iron ore, which is one of the highest grade iron ores available in the country. So as such, BHQ itself is not sellable, and neither we plan to sell. We will sell some of the concentrate that we produce out of this, which will be comparable to the iron ore market on that day, adjusted for the Fe content.
Okay, so similar to the hematite that we already sell, right?
Yeah, the yield of BHQ is around 35%. That means for 3 tons of BHQ, we get 1 ton of concentrate.
Of concentrate, correct. Okay. Then sir, just you spoke about the reserves, and I just wanted to know, given that we have a total reserve of about 850 million tons, now that we are expanding into iron ore into 25 and we'll be doing BHQ, do we have enough reserves for the next decade or so? Because the math was a bit weird. So do we have enough reserves to continue, or are we going to say maybe move towards BHQ completely in the next?
No, we will move into BHQ completely in 2034, 33, something like that, as per the mining plan. Till that time, we have reserves for direct sales ore as well. Over a period, once the BHQ plants are fully commissioned, the DSO will come down gradually, and ultimately it will be after 33, 34, something like that, it becomes 100% BHQ.
Okay, understood. And just one last thing, what are the pellet realizations? I just wanted to know the number if that's possible.
So we are not selling pellets right now, other than through our seed marketing program. The pellet realizations internationally are very poor. We are able to get a much better realizations in India. So in Goa, we are selling our pellets for around 11,000 rupees, 10,500 rupees. That's not us, but the manufacturer of the pellets with our iron ore.
Right.
We are exporting some pellets. I think in this year we should get around $130, $128.
130 to 100. Okay.
Yeah, $120, $130.
Okay. Okay, sir. Thanks a lot, and all the best for the future.
Thank you. The next question comes from the line of Vineet Thakur from Plus 91. Please go ahead.
Hi, good afternoon, sir. I saw the presentation and there was a question I wanted to get an answer on. What are the future capex timeline we're looking at? When are they coming on stream?
The next year, what we have, as I've been already telling you, this is around 6,000 to 6,500 crores is what we have to do. Till date, as we had announced, around 32,000 crores, 33,000 crores of capex over the next 5 to 7 years. Of that, 5,000 crores has been done up till 31st March 25. Next year is what we do, 6,000 crores, 6,500 crores. A similar thing we should be done in the next year, and a higher figure of around 8,000 to 9,000 crores in the next years. So by that, we should be completing it over the next 5 years.
And when are the projects going to be live, like this, the pellet plant 2 and the 1.2 million steel plant, the BHQ throughput? When are they going to be live? Like, is there a timeline of each of these plants?
Sequentially, I think it was there in the presentation, but let me repeat it. The first DRI plant would be live in June 2025. The first pellet plant and pipeline would be live in June 2025. The second pellet plant would be live approximately June 2026. The steel plant would be live the steel plant of 1.2 million tons would be live September 26. The first BHQ plant would be live June 27. The
March 28.
rest of the BHQ would be live March 28. And the final steel plant of 3 million tons
29.
would be live in March 29 to September 29.
Okay. Okay, sir. Thank you so much.
Thank you. The next question comes from the line of Manu Kumar, an individual investor. Please go ahead. Manu, please go ahead with your question and unmute yourself in case if you're on mute. Manu, are you there?
No.
Since there's no response, we'll move on to the next participant. The next question comes from the line of Abhishek Kamdar from Value Plus Advisors LLP. Please go ahead.
Yeah, thank you for the opportunity. Given the scale of investment planned in the steel vertical, and the long-term value creation potential, is it a possibility to eventually list the steel business through an IPO or demerger once the operation stabilizes?
No, Abhishek, there is no such plans or thought process at the moment. We believe integration may be the best way forward, but that's too forward a thinking for us right now.
All right. Thank you.
Thank you. The next question comes from the line of Vivek Patel from Lelux. Please go ahead. Vivek, please go ahead with your question.
Yeah, hi. Audible?
Yes.
Thanks, sir. I just wanted to know, regarding the bookkeeping questions, I just wanted to know the non-current assets have increased from 169 to 795 crores. So can you help me with that? What would be the breakup of that?
Yeah. This is more on the advanced tax position, the non-current assets is because and mostly that is received with the government authorities.
Okay, and even on the other current liability, so it has increased from 308 to 1335.
That is the advances from customers.
That is from advances from customers. Okay.
Yeah.
Thanks.
Thank you. The next question comes from the line of Siddharth Gadekar from Equirius. Please go ahead.
Hi, sir. So just one thing on the pellet plant. Given that there will be an annual maintenance, at peak we would be operating the plant at 90%, or we can go up to 100% also over the full year beyond FY'26?
I think the capacity would be 100%, not beyond, not in 27, but we will be able to achieve 4 million tons in each of these plants by 28 or so.
Even adjusted for the annual maintenance that we'll take a shutdown?
Yeah.
The plants are designed for a higher capacity, so this would be what we can achieve for the whole year, including the annual shutdowns.
Okay. So, and secondly, in terms of when we spoke about that 100 million tons of iron ore moving from allocation to the auction route, so given that the market will likely become tighter, is there scope for us to increase prices further from these levels going ahead?
Steel is a commodity, iron ore is a bigger part of the same commodity, and I would not even think of predicting the future pricing of any commodity.
Okay.
Does that answer your question, Siddharth?
Yeah.
Thank you. The next question comes from the line of Karthik Khandelwal from Hem Securities Limited. Please go ahead.
Sir, thank you for having me again. I just want.
We lost you.
The participant seemed to have dropped. Ladies and gentlemen, that brings us to the end of the question and answer session. I would now like to hand the conference over to the management for the closing comments.
Thank you, everybody, for an engaging question and answer session. Hope we have replied to all your queries. If anything is pending, you can always get in touch with any one of us, so that we'll be happy to give you all the replies in that case. Thank you very much, and thank you, Anand Rathi team, for hosting this call.
Thank you, sir. Ladies and gentlemen, on behalf of Anand Rathi Share and Stock Brokers Limited, that concludes this conference. You may now disconnect your lines.